Hello, everyone. Mariel Weiss with Keller Williams Real Estate here, coming to you with your November analysis of the real estate market, actually in two locations. First, we're going to focus on Southeastern Pennsylvania, as we typically do. And then the second focus will be Southeastern North Carolina. That is because, as we announced earlier this year, several of our team members are licensed in North Carolina, and we have team members there living to help the people looking to buy, sell, rent, or invest in that area as well. So keep this in mind for all of your real estate needs there as well. When we're taking a look at the market, one thing to keep in mind is that real estate is hyper-local. And our hope is that by sharing both of these markets at the same time, that you'll have a greater appreciation for how local real estate can be. I think it also puts some things in a perspective to understand how great or not great the market is performing, and it perhaps could lead to better forecasting for us in the future. So overall, the general theme has been that not a whole lot has changed. Days on market is not anything new for this time of year. Yes, it's gone up over last month in most of the areas that we're talking about, both in Pennsylvania and North Carolina, but that's not atypical for this time of year. We are still seeing home prices and home valuations slightly rise, but very modestly. And we are still seeing in certain instances homes selling in multiple offer situations. And then we're seeing, on the other hand, homes sitting. So it's very interesting to see, okay, why is that the case? It all comes down to the area that home is located in, the condition. And something we really want to point out is, I've heard from a lot of people, oh, I hear online, or I see online, I hear on the news that the market's horrible. The interest rates have just killed everything. The reality of it is, yes, the interest rates have gone up. So it's taken some buyers out of the market who cannot afford a home at that higher rate. The other hand of that is that the number of houses listed is lower than typically it was. So if you have both of these conditions lowered, you're kind of in that same ballpark for what we're seeing in the market. And that's why we are still seeing it as a seller's market in most locations. Certainly, if we start to see a continual trend of saturation go up, that's not normal for the time of year that it is, then that could be indicative of us moving more towards the buyer's market. We're certainly moving more towards a balanced market, but buyer's market is all the way on the other side over there. And I don't see us getting there anytime soon, although I don't have a crystal ball. So keep that in mind for our friends in Southeastern Pennsylvania. This is nothing new, nothing different than what we've seen. Definitely before you make a move, make sure you're talking with a real estate agent to give you that hyper-local advice. And we have all the stats down below. For our friends in North Carolina, both colleagues and clients that are down there, one little tidbit that I'll note for you, remember you're in a neighborhood or you're in a location that benefited greatly from secondary home ownership, or people were looking to buy that beach house or purchase a property, Airbnb, and rent out. So we have seen some changes in what the influx of people coming into that market is, and they perhaps are harder hit by these increase in interest rates. What we have seen that's interesting is that their final in the North Carolina market, Wilmington area, let's say, what we saw earlier in the year where people were getting maybe 102, 103% as a final sales price from their initial list price. We're now seeing that go the other way where someone lists a home and maybe they end up getting 97 or 98% on average of that list price. So we'll continue to monitor that to see what all of this means. A quick talk on rates, because that is really what drives a lot of the affordability. So rates don't drive supply and demand, which then impacts the home values. The affordability rates affect supply and demand, which then affect the home prices. It is not rates affecting the home prices. Okay, so it's all an equation of supply and demand. We have seen them wiggle the rates down a little bit, and for most of the people I speak to, they think that will continue to happen. So the best practice right now, regardless of the market you're in, is if you're looking to make a move, you need to get in sync with a real estate agent who will help you monitor that market, as well as a lender, because you could be out there looking for a home one weekend and have that home cost you one amount. And then the very next weekend, if rates came down, a higher priced home will cost the exact same as that other weekend home that you looked at. So it really does change that quickly. So If there are any concerns or needs that you have in real estate, again, either in Southeastern Pennsylvania or North Carolina, we can help you. And on behalf of the whole team, we wish you a very merry holiday season and a happy new year. And we'll see you next year. Bye.